Are we muted?
No.
Oh.
Okay. So it is 2 o'clock, and while we're waiting for people to continue to come on, just want to thank everyone for being here today. This is, of course, our statewide low to moderate amortizing loan webinar for NeighborWorks Montana. And I do have a few housekeeping items before I introduce Lori. This webinar is being recorded, and we will share that link with everybody afterwards. If you have any audio problems, please feel free to let us know through the chat function. And we do plan to open the lines up for some live Q&A at the end of the call. And if throughout the presentation you need to leave or anything like that, please feel free to do so. Like I say, we will share the link with you to the recorded webinar, but hopefully we can just go through the live Q&A and be able to hear everybody that way. I was going to tell you to mute your phones, but we've done that. And what do you think, Lori? Should we give them a few more minutes to come online?
Your choice. What do you think?
It's 1 minute after 2. Let's just give everybody 1 more minute, but feel free to chat.
Okay, let's give you 1 more minute, and then we'll dig in. This should be really a pretty quick webinar. This particular program isn't particularly cumbersome. It's sort of straightforward, so I don't think we'll be an hour, maybe a half hour.
And just so everyone knows, this is Lori Yurko. She has been with NeighborWorks Montana since 2004 and serves as our loan specialist.
That means I'm old.
But she is a wealth of knowledge, and she's great to have around the office. She's always so upbeat. So when she's ready to start presenting, we'll go ahead and get started. I think we're just giving like another minute or so for people to get on the line.
I don't know if I'm a wealth of knowledge, but like I said, I'm just old. So I've been around for a while. And really, with any of our programs, we don't ever intend for you to know every single thing about them, but just enough to be dangerous. You know, just enough to remember that we're out there to help you close some of those loans, and we're only a phone call away, you know, only an email away. So always feel free to call us. Maybe we should dig in?
Yeah, let's go ahead and dig in.
Okay, we're going to dig in. Okay, as you know, this is the State Low and Moderate Income Program, a NeighborWorks Montana program. Just real quickly, you know, we do more than just single-family lending products. We offer homebuyer education and counseling. We participate in forming and helping resident-owned communities. And we also do real estate development and acquisition funding. So we do many things. We wear many hats. Home buying the NeighborWorks Montana way, we'll go to page 3. I think the thing that makes NeighborWorks Montana a little bit different is that we like to incorporate the homebuyer education. And we really think this is an important piece. This is a financial transaction, probably the largest for most people that they will enter into, and we want them to be educated. We want them to know the process. We want them to know that there's assistance afterwards. We just want to see that education. So in order to use any of our products, the borrowers must take homebuyer education, and we work through a partnership across the state. We have partners in different areas that do the homebuyer education for us. Not only do we provide that pre-counseling, pre-closing counseling, the borrowers will also learn that we're there after the closing for some post-purchase counseling, some financial counseling if they need it, and heaven forbid, maybe some foreclosure prevention counseling. So we're there for the entirety, not just for pre-purchase. And we think with this coupling of the homebuyer education with NeighborWorks approved homebuyer education folks, that the result will just be wonderful. And I don't have the statistics, but statistics do show that folks that take home ownership counseling have less foreclosures. So I will search for that statistic, but it is true. Okay, we'll dig into the product, the statewide low and moderate income product. Now think of this as, I know we always say it's for closing costs, but you can think of it, I think, more like gap financing. So think of it as closing costs, gap financing, and in some cases, down payment assistance. So for this particular product, the total household income must be at or below 125% of the adjusted median income. And that spreadsheet can be found on our website. It's by county and by family size. And we can go up to 125% of the adjusted median income. Of course, the borrower must qualify for a first mortgage, and that can be FHA, VA, conventional, or RD. And then we do have through a participating lender. And really, you can kind of line through that. Really what we mean is a NeighborWorks Montana approved lender. So to be able to use NeighborWorks Montana products, one of two things. You have to have, actually, I guess two of maybe three things. You have to have an actual building, an actual brick and mortar office in the state of Montana. And then you must be either approved by RD or Montana Housing, MBOH. So an actual building in the state of Montana, and then either approved by MBOH or RD. And you can use our products. We do have one product, not this particular one, where you do have to be a participating lender to participate. But the statewide low to moderate income program, and then we have a 0% deferred program. Both of those can be used by just NeighborWorks approved lenders. Okay, we're back to the homebuyer ed because it's so important. The borrowers are required to complete a NeighborWorks approved homebuyer education class prior to loan closing. And just an interjection here, for FHA first mortgages, the maximum household income can only go up to 115% of AMI. That's an FHA rule. So even though we can go up to 125, if you're looking at an FHA first, we can only go up to 115% of AMI. We'll go over to page 5. Available to assist qualified borrowers with their closing costs associated with purchasing a single-family home. And again, just don't look at it in terms of closing cost assistance. It can be some down payment assistance. It can be some gap financing. NeighborWorks can go up to 105% CLTV. So just as long as we don't go over that 105 CLTV, we're okay. Now with this particular program, the NeighborWorks loan cannot assist in the 3.5 down payment for FHA. So the borrower must have their own 3.5 down on an FHA. I'm going to just interject really quick because it's kind of confusing here. This is statewide, so this pertains to pretty much statewide except the city of Great Falls and the county of Cascade. If you're dealing with anything in the city of Great Falls or Cascade County, we can provide the 3.5 down. So I guess just kind of have that in the back of your mind, but everywhere else in the state, this program cannot be part of the down payment for FHA. You don't have to be a first-time home buyer to use this program. And the borrower must occupy the home as their principal residence for the duration of the loan. And And again, it's single family, no multifamily, no duplexes. We have here that the first mortgage must be a 30-year fixed rate. And that's what we prefer, but we have done a few of our loans with a 15-year first. So it's not that we wouldn't do it, but we'd want you to talk to us about it first, because we prefer the 30-year fixed, but we would look at something else. All right, page 6. The loan amounts for this particular program, minimum loan amount is $1,500, maximum is $10,000. The term of the NeighborWorks loan is based on where their income lies, a percentage of adjusted median income. So if they're below 80%, they can go out to 30-year term. If they're over 80% adjusted median income, we look at a 15-year term. We will require their payments, as we do with all of our programs that have payments. We require them to be ACH payments withdrawn automatically monthly from savings or checking account. And we're putting this in again, homebuyer education. Borrowers must take the homebuyer education class prior to closing.
And I think the reason we emphasize that so much, Lori, is because it not only helps them in the home buying process, but it creates a sustainable home owner going forward. They know how to budget, they know how credit works and different things like that. So we hate to harp on that, but then again, we want to harp on it because it is an important aspect.
That's great. Thanks, Michelle.
Mm-hmm.
Now we're going to go into the interest rate for this product. The interest rate is going to be based again on their income, where their income lies in the adjusted median income percentage. So we kind of have two interest rate columns. They're kind of in the middle there. We have the first one, interest rate, and then we have the loan pool participant rate. So there are some lending institutions that are participating loan pool participants with NeighborWorks Montana, and those particular lenders will get a more favorable interest rate for their borrowers. And if your lending institution is not a participating loan pool lender, then you just look at the interest rate column. So for instance, let's say your borrower's income is 100% AMI. So you're going to go down to the 81 to 115. If you're a non-participant lender, that second mortgage is going to have an interest rate of 7.25. If your lending institution is a participating lender, you're looking at 5.25. And because that income is over 80%, they're going to have a 15-year term instead of a 30-year term. So that's kind of how we look at it. Interest rates do change quarterly, but really we don't change them very much. These interest rates have been around for a while. The credit guidelines, as with any of our programs, the mid-score we like to see be 640 or above. If it's below 640, we're certainly going to look at it, and I can honestly tell you I don't think we've ever denied anything in terms of a credit score. But we're going to ask for a few more things. If the mid-credit score is below 640, we're going to ask for a credit explanation letter from the applicant. We're going to ask for a VOR, verification of rent. And then we're also going to ask for a letter from you, the lender. So we'd like a letter from the loan officer as to why NeighborWorks Montana should grant a ratio waiver, or a credit waiver, excuse me. So we are open to looking at things below 640, and we do, and we approve them, I think, most of the time, but we just want to see a few more things. Our printed ratio guidelines show us 32:41, and then we have unless valid compensating factors apply. So with anything, especially ratios, I think it's hard to have a guideline because you look at them and you say, oh, mine doesn't fit in there. I guess I can't qualify. Wrong. Someone said this morning we like to color outside of the lines, and we do. So this is a box, and we color outside of the box all the time. We just need to know that we have some good compensating factors, and we'll probably ask you as the loan officer again to send us a letter with the package saying why you think NeighborWorks should grant a credit ratio waiver on this particular loan request. So please just think of these as kind of, I guess they're in a box, but a lot of our lending is outside the box, but we just have to make sure that we feel good about it. So if you've got a 43 back end, that's certainly something we'll look at. If you've got a 49 back end, we may not look at that. But within reason, we'll look at things, and certainly with valid compensating factors, absolutely. So don't just be limited to these printed ratio guidelines. Now the next sentence I want you to just completely cross out. It says housing ratio must be at least 29%. Wrong. I'm going to take credit for all of this because Michelle gave me this PowerPoint and she said, look through it and make sure everything's good. So I told her I did look through it, which I did. I just sort of skimmed it and I missed a couple things that probably shouldn't have been in here. So cross that out. The housing ratio can be whatever you want it to be, hopefully not over 32. But remember, we're going to look at it if it's over 32. We'll just want some compensating factors. Okay, the combined loan to value. Again, the CLTV cannot exceed 105. With this program, and any program, we want to have the borrower have some skin in the game. And with this particular program, we're going to ask them to have a minimum of $1,000. So they're going to need to come in with $1,000 of their own funds. Earnest money counts towards that $1,000. Any fees paid outside of closing by the borrower, i.e. home inspection fee, that can go towards this $1,000 if we can show that POCB fee paid by the borrower on the first mortgage CD. Now there may be times where the minimum is going to be more than $1,000, and that's going to be, you know, if we're kind of dealing with something over 105% CLTV, and also if the borrower has over $5,000 in liquid assets. So this program does have asset limitations. Liquid assets, $5,000, and total assets, $70,000. So if you have someone who has $6,000 in liquid assets, we're going to ask that they put $1,000 of those liquid assets into the deal because we need to bring them down to that $5,000 limitation. So there may be times where that minimum will be above $1,000. We have some fees. We have a loan underwriting fee of $375, and then we have approximately $225 in other loan fees. We're going to have a title closing fee, recording. We'll want a simultaneous issue standard loan policy, so we'll have that title premium. And of course, we'll have our prepaid interest. So NeighborWorks will have fees on this loan product, and the fees may be financed into the NeighborWorks Montana loan. And that's, of course, up to the max loan amount. We can't go over that max loan amount of $10,000. The NeighborWorks loan will be secured by a deed of trust. We have here must be in second lien position. But again, I'm going to tell you that's preferred. We prefer to be in second lien position, but we would certainly look at being lower, third, fourth. Again, this is one of our boxes that we can color outside of. So, and I'll give you an example at the end of one that I'm working on now, where NeighborWorks is in third position. Our deed of trust, mortgage is not assumable. And then it says the property cannot have been rented in the previous 90 days. And this isn't true. This is another thing that I missed. So maybe kind of line through it or something. Here's the deal with this program. If the appraisal shows that the subject occupancy is vacant or tenant, then we're going to need to know if the property was rented. It's preferred that the property wasn't rented in the past 90 days. But with this program, if it has been rented, we just need to have some sort of proof that the tenant was given proper notice. So if the tenancy was month to month, we need to have something that shows the tenant was given a month's notice. We just have to follow that tenancy or follow the lease or whatever we've got, and we just need to show that we're not displacing a tenant. We cannot displace tenants when using NeighborWorks funding. So it doesn't necessarily mean that it can't have been rented in the past 90 days. We just have to show that everything is good. Okay, really you can cross out this whole next page, page 10, I'm so sorry. This one is for our state home deferred product, which we're not talking about today. But you can kind of go by steps 1, 2, and 3. Step 1, what do? You as the first mortgage lender send in a loan package to us using the reservation checklist, and that list can be found on our website, and it lists all the items that we needed you to send us in the loan request package. Then within 3 days of receipt of the application package, we will have initially reviewed and looked at the package, and we will send the applicant the required loan estimate and initial disclosures. Then once initial qualification has been established, we will issue a conditional approval letter. It'll be an approval letter with some conditions. From then to closing, we'll work on getting those conditions in. And then NeighborWorks will do everything with the title company for the NeighborWorks loan. We will send our instructions for the NeighborWorks loan. We'll do the closing docs, and we'll send the funding dollars for the NeighborWorks loan. So, that is totally out of your hands. You don't need to worry about that. We, of course, would like to look at the first mortgage CD as it's being prepared, just so, we know things are showing on that CD as we want them to show in terms of the NeighborWorks loan. So you can kind of look at steps 1, 2, and 3 on there. In 3, cross out order the environmental review, and then cross out 4 and 5.
Sorry, guys.
No, I'm sorry. It's, Michelle and I were saying we were trying to juggle a bit too much, and I apologize. So I just want to recap just very quickly. Statewide low and moderate income program, an amortizing second mortgage, again for closing costs and gap financing, in some cases down payment. Term and interest rate are based on the income and where they lie percentage-wise within the AMI, adjusted median income. We can go up to 125% of AMI, but if your first mortgage is FHA, we can only go up to 115. Again, we've got some fees. Printed ratios, 32:41, but remember, we can color outside of the box, we can color outside of the lines, and we want to know that there are some good compensating factors if we're going to color outside that box. Your first mortgage can be FHA, VA, RD, conventional. Again, remember for FHA, the borrower must have their 3.5 down. The NeighborWorks loan cannot cover that 3.5 down. We've got asset limitations, 5,000 liquid, 70,000 total. The property has to be owner occupied. NeighborWorks payment will be made ACH. We like to be in second, but again, we can certainly look at being in a different position. The minimum borrower investment is $1,000, and the CLTV cannot go over 105%. And then the little rental piece. It can have been rented in the past 90 days, but we just have to show that the tenant was given proper notification if it was.
You said you had an example?
I do. I have a couple examples. One I'm working on right now happens to be in Hamilton, or Valley County. It's a household size of 4, husband and wife and 2 dependents. The husband is the only one that works outside of the home. And so their income is at 48.35% AMI. So they're at 48%. The sales price of the home is $190,000. And this is where we're going to go into third. We've got a first mortgage, which is an RD guarantee at about $127,000. This borrower is going to have a second position, 0% deferred home mortgage through Missoula HRC, and that's $35,000. And then NeighborWorks is coming in with this low to moderate program that we just talked about, $10,000, so we're at the max. Because the income is at 48%, the rate on the mortgage is 100, or on the NeighborWorks deed of trust will be 1.5, and will go 30 years. And then in addition, in fourth position will be $7,500 in Home Start funds. So I just think this is a great way to see. We kind of like to call these cocktail loans because they're different layers. And we don't know if each layer is kind of like a part of the cocktail, or when you're done with the loan and it's closed, you're ready for a cocktail. But anyway, I just thought this was great to show you that we will look at being in third position, no problem. And this is, I think this is an exciting loan, and I'm glad we're helping with that. Just another one that I've done in the last few months. They both happen to be RD guarantee firsts. This particular one was in Roundup, so family of 5 in Musselshell County. Husband and wife and 3 dependents. The husband works outside of the home. These folks had lower income also. They were at 35% AMI. A low sales price. The sales price of the property was $86,000. So we had a first mortgage, which RD guarantee. I didn't write down the amount, I apologize. But NeighborWorks came in with a second with this particular program, low to moderate. We were at $6,400-ish because we were kind of creeping up to that 105 CLTV with such a low sales price. But we were able to help these folks and make everything come together. So I guess that I just wanted to give you a couple examples, of how we can help with this particular loan product. So think of us.
Okay.
What else can I say?
Well, I was thinking this would be a good time to open up the lines. So we're going to open up all the phone lines and let you guys just chew Lori's ear off about any questions you may have. Let's see. Okay, phone lines should be open, so please feel free to announce who you are and what organization or bank or lending institution you may be with, and talk to Lori as much as you'd like.
I just, that covers what we're wondering. Yeah. No.
Are we good?
Does anyone have any questions for Lori?
I think what I'll do really quick is name off those participating lenders, and those are the lenders that participate in our bond pool. And those are all the divisions of Glacier Bank Corp. So Glacier Family of Banks, Wells Fargo, First Federal Bank and Trust out of Billings, Missoula Federal Credit Union, First Interstate Bank, Opportunity Bank, Stockman Bank, and U.S. Bank. But remember, you still can use this product we talked about today. You'll just, look under that interest rate column instead of the loan pool participant rate.
Does anyone have any questions at all?
Okay, I read this today. I sometimes get these Luna bars, they're like, I don't know, a protein bar or something, and they have sayings on the back, and this is the one I read today. Great things never come from comfort zones. So get out of your comfort zone and try some of these NeighborWorks products. I think you'll love them, and you'll find that they're actually really easy. They're not going to be a cumbersome addition to your loan at all. Of course, whenever you add some subordinate financing onto the loan, you're going to add a couple days, but it's really worth it. So feel free to call me, email me, and then there's also my colleague Candace Ayler. Please feel free to call her and email her.
And we do offer private webinars if you and a group of your colleagues have any questions or need anything clarified. We can do it through the phone. You can do it through email. We can do a webinar as well. And this particular webinar is being recorded, so we will share the link to that as well. And again, we thank you guys for joining us. Our next webinar will be roughly around July 23rd, and we'll keep you posted on a more firm date and time and subject on that, but that's kind of what we have planned.
Can we give just a little spiel for the housing conference coming up in June?
Sure. There's a question, so you can start with that, and then I'll get to the question. It says, Lori, do I understand correctly that the 502 direct loan would not work with this product because it's a 33-year term? And this is from Jolene Wenzel.
Hi, Jolene. This is one of those, special circumstances where we could work outside of that 30-year box, and we could use a 33-year term. A lot of times with the RD direct loans, we use that 0% deferred program of ours because it's kind of more favorable for that lower income borrower that's using RD direct. And for those loans, I believe we use the same term as your first mortgage. So if you're 33 years, we're going to be 33 years. And so the same with this. We would definitely look at going out 33 years if that's what your first mortgage is.
And I have another question through the chat, and I apologize if I butcher your last name. It looks like Randy Pompey. Says, are the first RDs and FHAs usually with MBOH that couple with the NeighborWorks products?
For this particular program, the low to moderate, the first mortgage does not need to be MBOH. It can be, but it doesn't necessarily have to be. So we would be looking at anything, FHA or an MBOH FHA, RD or an MBOH RD. It doesn't have to be MBOH, but it can. So I hope I answered your question on that one.
Go ahead with your
Oh yeah, well you help me because you know more about it. We're having a statewide housing conference in June in Billings. It's going to be at the Billings
Hotel and Convention Center.
17th, 18th, and 19th.
Mm-hmm.
I'll let you tell them more.
You can find information on our Facebook page under events. You can also find more information on the Montana Housing website as well. And early bird registration prices, I want to say off the top of my head, go through the 22nd of May. But there's going to be all sorts of great plenary speakers and sessions. We're also doing a real lender and real estate focus on Tuesday specifically. We really encourage everyone to attend. And Lori will be there as well.
I will be there, yeah. It'll be fun. So I hope to see a lot of you folks there. It's something that we do yearly,
Yes.
and we work with MBOH.
Montana Housing. This year we are also partnering with Mountain Plains NARO. So,
And what's that?
I was lumping
It's a
along.
test,
I was
only a
lumping
test.
along here. I'm sorry, you guys. I wasn't prepared for a presentation about the conference, but they are someone that we partner with every 4 years. I honestly don't know much about them, but you can find out more information on the event website, which you can get to through our Facebook page or also montanahousing.gov.
And I know MBOH, Montana Housing, is working on one of those sessions at the housing conference to go towards continuing education credits. I know they're still working on that, so hopefully that'll be something that will come to fruition so that one of those sessions will be for continuing education credits.
And we'll definitely keep you guys all posted as well, so be on the watch out for that. Does anyone else have, whoops, there might be another question here. Now the phone lines are open, so do feel free to chat with us if you'd like, but here's another question.
Hi,
Lori.
Tammy.
This is from Tammy. I understood that the 29% DTI required on the first mortgage is so they don't borrow too much on the second loan, so their first mortgage payment can't be lower than the 29%.
Well, it is confusing, and part of it's confusing because I left that in this little handout and I should have crossed that out. For this particular program, the low to moderate, the housing ratio doesn't have to be anything. There's no requirement for that housing ratio other than we hope to stay at 32 or below. Could be a little bit over that. Where that 29 enters in is our 0% deferred program. It's called our state home 0% deferred program. And that's where it's 0%, no payments, and it's to that borrower whose income is 80% or below. We do have areas where we're approved to use that funding. And for that particular funding, for the 0% deferred program, the one we didn't talk about today, that housing ratio has to be at least 29%. And yes, you're exactly right. It's because the feds don't want us over subsidizing that borrower. So you do have to remember that for one of our programs. But for this one, Tammy, and also you guys can use that 20 plus program of ours. We didn't talk about that today. But for both of those amortized programs, there's no restriction on that housing ratio in terms of what it has to be. Hope I answered you, Tammy.
She said, okay, thank you.
Great.
And I wanted to let you guys know really quick before we wrap up and give you a few minutes of your day back. We do have a lender-specific page on our website. So if you go to nwmt.org, and then I'm trying to picture our website, there's a for lenders page, and you can get to it along the menu there. We do have all of this information accurately portrayed on our website. This is also where we house the links to our webinars, as well as the ability to view our monthly lender e-newsletters that come out and join that list if you would rather do that. So please feel free to utilize that page on the website. If you see something that's wrong or you see something that you think would be helpful to you guys, drop Lori a line.
Sure.
Drop this. My name is Michelle Rogers. I'm in the marketing. You can drop any of us a line, an email, and let us know. And that page is really for you guys. So help us make it very useful for you. And again, if no one has any other questions, we'll go ahead and give you guys a few minutes of your day back, especially since I can't talk. And we really appreciate you guys joining us today.
Thank you so much, guys. Talk to you soon.